Hello and welcome back to the Expat series from Suitcase to Settlement. Now, my name is Beth Ward and I head up the partnerships here at Skybound Wealth Management. Now, welcome to today's session, Leaving the UK, Don't Make These Costly Tax Mistakes. Now, moving abroad isn't the end of your UK tax story, it's just the start of a new chapter. And if you're not prepared, it could be a very expensive one. Now, in this session, we'll reveal those critical mistakes that British expats make and how you can avoid falling into the same costly traps. We'll break down the new non-dom rules and residency changes and exactly what steps you need to take to protect your wealth, secure your future, and stay ahead of the taxman. Now, the rules are changing fast and the cost of getting it wrong is even faster. So let's make sure you're ready. Today, I have with me Josh Burton, who is Chief Financial Officer and Chartered Accountant here at Skybound Wealth Management. Now, Josh has a real passion for helping expats make those smart financial moves. With years of international experience, Josh knows exactly how to turn complex tax and investment challenges into clear, practical solutions. Welcome, Josh.
Thanks, Beth. Great to be here.
So, Josh, before we get into it, please can you give us a little bit oversight of who Skybound Wealth Management are and what your role is here?
Yep, of course. Skybound Wealth are a global financial planning business. We're multi-regulated, so we're regulated from the US to the UK, across Europe, and here in the UAE where we are today. My role is Chief Financial Officer, or CFO. That means I'm in charge of the company's financial matters. I'm a chartered accountant, but I'm also a level 4 qualified financial advisor. So I do deal with some clients on both the personal and corporate side of things. Skybound Wealth, we're not tax experts, we're not tax advisors. Our role is to mainly be your financial partner throughout your life as an expat. And we do engage with a number of tax experts across the world as part of that planning that we do for you as an individual during your expat life.
Okay, so Josh, let's really get into it. So what does this term non-dom really mean?
Sure. So the term non-dom is short for non-domiciled. So in tax, there are basically two things to consider. There is your tax residency and there is your tax domicile. In the UK, the term domicile is actually coming to an end, so they've been replaced by the long-term residency rules. But in essence, your domicile as a UK individual would be where you're going to end up at the end of your life. Most British nationals' domicile will remain as the UK throughout their life, but their residency may change as they move across the world. If I take myself as an example, I would say I'm a UK domicile. I have a British passport, my family are in the UK, I have a property in the UK. But at the minute, I'm a non-UK tax resident. I'm here in the UAE, I've lived here for nearly 10 years. There are several things to consider when it comes to tax and domicility and residence. Your residence will determine how much income tax, capital gains tax you pay in the UK. But your domicility, or your long-term residence as it's now called, will deem how much inheritance tax you may pay at the end of your life. The rules have recently changed in the UK. They changed on the 5th of April 2025, so very recently. Where the term domicile is no longer really referred to, and instead is now referred to as the long-term residency rules. So what that means is it's no longer about where you're going to end your life, so to speak, your domicility. It's more around a 10-year rule. If you've been a non-UK resident for over 10 years, or 10 years in the last 20, you may no longer be liable for inheritance tax on your overseas assets.
So you've talked a little bit about the 2025 new tax changes.
Yes.
So let's talk about that a little bit more. What are those changes and what could that impact be for expats?
Okay, sure. So previously, your inheritance tax bill, so to speak, would be based upon your worldwide estate if you were a UK domicile. There are various different ways of reducing that tax bill or mitigating those circumstances, but in essence, that's what that means. That's now changed. So from the 5th of April this year, 2025, your inheritance tax basis will be looking at your long-term residency in the UK. So there are two ways to look at that. If you've been a non-UK resident for a consecutive 10 years, you'll no longer be liable for an inheritance tax on your non-UK assets. Or if you've been a non-UK resident for more than 10 of the last 20 years, the same will apply, so you will no longer have to pay inheritance tax on your non-UK assets.
So talk to me a little bit more about why British expats get this wrong in the first place.
Sure. I think many British expats, when they leave the UK, think that that's the end of their suppose, dealings with the HMRC. They've moved over to the UAE where it's tax-free, but that's not the case. If you do have ties in the UK, if you still have earnings in the UK, maybe from a rental property, you still have to do a UK tax return, and you have to think about your tax residency. Many expats actually forget, as part of doing your self-assessment tax return each year, you should also file an SA 109, which basically tells the HMRC that you are no longer a UK tax resident, which is really important. That's really important for many reasons. Number one, to make sure the HMRC know you shouldn't be paying UK tax on overseas earnings. And then secondly, to show the HMRC that you're building up these years that are really important now towards your inheritance tax planning, to show that you are building towards a 10-year rule. So you're building 10 years of non-UK residence as you're living overseas.
So if we're thinking about living within the UAE, now everyone sees it as a tax-free country here, but what are some of the things that expats must really consider when moving here?
Sure. I think the first thing, and one of the most important things, is you move from the UK to the UAE, you're no longer paying income tax on your earnings, you're no longer paying national insurance on your earnings, which typically means that your income could double. The amount that you see in your bank account at the end of the month could be double what you were getting in the UK. With that, many expats forget that they had a structured pension in the UK. You're basically forced to put money into a pension into the UK. That doesn't exist here in the UAE. You do have something called end of service gratuity, but it's nowhere near enough to see you through retirement. So what's really important is that when you do get here to the UAE, you put some kind of personal pension plan in place as soon as possible to capitalize on the additional earnings that you were now receiving that you weren't getting in the UK. There are a number of other things. I think that it's worth mentioning that it's really important as a British expat that you monitor the number of days that you spend in the UK while you're now living in the UAE. You can't just say, I'm now a non-UK tax resident. It's really important that you stay below the thresholds and the yearly limits. They can be very complicated, depending on how many ties you have back in the UK. So it's very important that you refer to the HMRC guidelines, or otherwise speak to a professional that can help you with that.
So something that expats must consider is to start thinking about making those changes before the rules change. What do some of those opportunities look like? Okay,
sure. The first thing I'll say is that the rules have already changed. They changed on the 5th of April this year. That doesn't mean it's too late. There's lots of planning you can do. I think that the first thing you could do is quite simple. Just make sure that your days as a non-resident are actually tracked. You keep a track of that year on year. Something that I do as an accountant, I always have a spreadsheet that does that. Alongside that, I think it's really important that you think about where you're placing or structuring your investments as an expat. There are a number of different ways that you can do that to make sure you're not only benefiting from, the rise in price in the stock market, but also making sure that you're doing that in a tax efficient manner. There's lots of trust planning you could consider. Inheritance tax typically works on a 7-year basis. So if you were to gift your assets and survive 7 years, you would not be liable for inheritance tax on those assets. You can do that via trust planning. You can do that by just planning ahead. And that's all about protecting your family at the end of the day, because they're going to be the ones that see the implication of inheritance tax on the estate you leave behind. One of the other things that I think is worth mentioning is that from April 2027, the UK government are planning to include unused pension allocations within your estate or inheritance tax purposes, which is something that's new and has a pretty big implications. You could be looking at a 40% tax bill on any pension pot that you leave behind in the UK. So it's really important that you look at all your existing pension arrangements, whether that be your SIPs or whether that be an existing workplace pension, and make sure that now that you're overseas, that you're planning that and placing that in the most tax efficient manner as possible.
So we've talked about some of the opportunities. What are some of the common missteps that expats should look to avoid?
There are many things, and I've actually seen a lot of these during my 10 years abroad. So I would say that the first thing, and probably one of the most important things when you first move, is to make sure you let the HMRC know that you have moved abroad. And that's quite a simple thing to do. You can do it online, or you can do it via a submission of a form. Typically best to do that through a professional. I would say that the next thing that should be towards the top of your list is to make sure that early on in your expat life, you set up some form of savings or pension structure to make sure that you are capitalizing on the increased income levels that you have over here or wherever you're living in the world from paying reduced tax. I think another thing that I've seen people forget about is they think that because you are now living overseas that basically the HMRC don't need to know anything. That's not the case. If you still have ties in the UK, if you still have maybe a property back in the UK that you're now renting out, if you're still earning some level of revenue in the UK, you still need to submit a tax return on an annual basis. And in some cases, you may need to just submit a nil tax return. What's important when you do that is that you also submit a SA109, which again lets the HMRC know every single year that you are no longer a UK tax resident. On that form, you also actually need to put the number of days that you spent in and out of the UK. And that's why it's really important that throughout the year you track your travel days. You could be living over here in Dubai or anywhere in the world, but if you like to visit home, if you like to fly back and forth for weddings, birthdays, for Christmas, it's really important that you don't go over the yearly threshold because you could trigger becoming a UK tax resident again, and then your global earnings could be taxed in the UK, which would be massive. So those rules can be quite complex. So it's really important that you read the HMRC guidelines closely. So that's one thing. Another thing I would say is to make sure that as a part of doing your annual self-assessment in the UK, that you make sure you stay up to date with your national insurance contributions. So you can make voluntary national insurance contributions, and that's really, really important to make sure that you're still eligible for the UK state pension when you do get to retirement age. The amounts that you need to pay on an annual basis are not the biggest, and the state pension is not a bad income when you do get to retirement age. And I think that the final thing I will say is that when it's really important that when you're looking at your investments and how you're looking to, I suppose, grow your wealth over time, that you're not only looking for good opportunities to make a good return on an annual basis, but also make sure that those investments are tax efficient and they're not going to trigger any future capital gains liabilities. And that's why it's really important that you don't just look for an investment advisor that's going to give you the best investment solutions, but you look for somebody that's also going to think about your tax situation. And that's where Skybound Wealth come in. And the financial advisory piece that we offer is really important because it looks at both sides of the equation.
So how can Skybound really help here?
The way that we can help is we can review every individual's situation on a bespoke basis. I think that's something to really remember as an expat, is that not everybody's situation just requires an off-the-shelf solution. We are multi-licensed, which means that as an expat, and expats typically do, as you move around the world, we can stay with you as your global financial advisor wherever you go, or in most places you go. Even if that means you going back home to the UK, for example. We're an FCA regulated business, so we could hand you back over to an FCA regulated financial advisor that understands your situation. We can remain as your long-term partner. I think one of our ways of working is to always plan for the long term and not for the short term. Many investors or DIY investors think very short term. They think about returns over a year or 2 years. It's really important that you're not thinking about the next year, but you're thinking about the next 20, 30 years as you move towards retirement. Planning early is really important. I think that's why it's really important to engage with a professional financial advisor, financial professional such as the advisor we have here at Skybound Wealth, because we can make sure we hold you to account in everything that you need to do. It's really easy to stick your head in the sand as an expat. You move abroad, things are exciting, you're earning more money, and you kind of forget about everything that needs some longer term planning. You kick the can down the road. The earlier you look at that, the easier it is. And as I said, it's sometimes much easier to have someone on your side, a financial partner, so to speak, to really hold you to account.
So can you talk to me a little bit more about that process and how we can support them?
Yeah, sure. I mean, everything that we do here at Skybound starts with information gathering about you as an individual expat. That's really important. We've got some fantastic technology in-house that allows for the ongoing tracking of the initial meeting and then how your situation and circumstances change throughout your time as an expat. I mean, it's important to mention that we are an independent financial advice business. We are not tied, so we're not like a bank. So we have a multitude of different solutions out there, and we're able to go out to the market and maybe find something that's bespoke to you as an individual expat, maybe something that we're not working with already, but you may need. We can go and find that for you. And yeah, we will make the most tax efficient, I suppose, the most risk-free recommendation to you as an individual. Risk is worth mentioning, I think, as well, because as an individual, everyone has different risk tolerances. That's a part of your fact find, your questionnaire, and that will change and develop as you go through life. And at the end of that, you may come out of it with some kind of financial investment product solution. We will then be your trusted advisor around that recommendation. As you grow, as your wealth grows, things may change. You may have children, you may get married, you may decide to move again. Like I mentioned earlier, we're multi-regulated, so we can move with you as you go through life. We can look at your insurances, we can look at your protection. I think we want to be an expat's true financial partner for life. We want to set a long-term goal with you as an expat, and we want to be there every step of the way with you as you work towards that goal.
So for those who are watching, what final piece of advice would you give them?
I would say plan early, engage with a financial advisor as soon as you relocate, or sometimes even before you relocate, because there'll be things that the internet doesn't tell you, that ChatGPT doesn't tell you. That would be my main piece of advice, is find a financial partner, someone to be on that journey with you throughout the rest of your life as you work towards retirement.
So this has all been super insightful, Josh. Thank you so much for your time. And please today, if you would like any more support or further knowledge, please book a complimentary session with us. We would love to help and support you moving forward. But thank you so much for watching, and we'll see you next time.